A very slight and temporary setback is all that is happening with gold and silver today. I'm going to talk about what happened in the markets and why psychology plays a huge role in how they perform. Let's talk about it as we explore. It's not very often that we see both gold and silver down at the same time. We've been so used to and spoiled by the markets going up and up and up. Well, today we're seeing a little bit of a pause. They're a little skittish today, the markets are. A little bit of weakness occurring, and for not a very good reason, by the way. I'm going to explain what that is in a moment. But whenever there is a dip, even small, it's a good time to shop around if you're in the mood or have the money to buy some more precious metals. You know, there's a time to buy and not to buy. My friends at Summit Metals, they know this all too well, but they're there not to apply pressure, but to be there to answer questions, provide services, and excellent customer service. So whenever you're ready, check them out and experience their great customer service for yourself. The link is down in the description below. So gold and silver today are down slightly. We saw it first happen on our Sunday night market watch when the Shanghai markets opened up. We saw silver get hit fairly hard, but it did bounce back some today. Right now, in late trading, just before the markets closed down, silver is down about 21 cents. So not a big drop, down just over a third of a percentage point to $58.18. It did earlier in the day, trading day, drop back to $57.56 as a low. Gold dropped to $6.70, down to where it sits at $4,192.60. It's only down 0.16%. Platinum and palladium, both those metals are up slightly in the other direction. So gold and silver prices being lower in U.S. trading, they're essentially seeing selling pressure on worries that the U.S. Federal Reserve will lean hawkish in its rhetoric despite delivering a rate cut this week, according to Jim Wyckoff. So now we're looking beyond this rate cut. But what does that mean, really? It means that there's a potential that we may see a pause next time around. And is prompting some selling pressure in gold and silver, as news was just out that the U.S. producer inflation reports for October and November that were expected to be released later this week have now been delayed until January. So that throws some more uncertainty into the present U.S. inflation situation. The Federal Reserve's Open Market Committee begins its monetary policy meeting just in hours from now. In fact, by the time you see this video, it may be happening. And that meeting will end Wednesday afternoon with an FOMC statement and then a press release from Fed Chair Jerome Powell. And it's that press release that is going to be the game changer as to what gold and silver are going to do now. You know, the markets are baking in essentially this rate cut and have been for a while. So they're kind of looking past that. But I think once it actually hits, we're probably going to see gold and silver climb back up again to a degree here. Maybe not by a whole lot, but I still think we're going to see it bolstering because that means it's a real thing. Markets are now pricing in a 90% chance of a quarter-point interest rate cut at this week's FOMC meeting, but market expectations are growing that the FOMC statement and Fed Chair Powell's comments at his press conference may lean hawkish on U.S. monetary policy, likely due to worries about sticky inflation. And inflation is sticky. In fact, we're going to see here, as I look at this Fed Watch tool right now, refresh the page, it is sitting at 89.4% chance that the Federal Reserve will cut rates by a quarter point. Actually, I thought maybe it would be higher than that, with 10.6% chance that they can leave rates unchanged. At the January 26th meeting, that means they're saying now that there will be a 68.5% chance that it will be essentially stay flat. In other words, a pause then, with only 23.8% chance at the January meeting that there will be another rate cut, another quarter point cut. So that is where they are leaning now. So the majority think that it's going to be a pause in January 28th. So we'll see how that plays out. But we're also looking at the World Bank and the reports that China's central bank added to its gold reserves for the 13th straight month, according to data released just a day ago. Bullion held by the People's Bank of China rose by 30,000 troy ounces last month, bringing the total to around 74.12 million troy ounces. That's just the reported numbers. I may talk about that in another video, but the current buying cycle began in November of 2024. Central bank purchases worldwide ramped up in October after a lull in the middle of the year, according to the council. And so we're also looking at the dollar index, and the dollar index has firmed up a bit, but we take a look and see in real time what it's doing at this moment. It is actually up slightly, up 0.09 to 99.11. So the dollar really is, for all intents and purposes, pretty strong now in comparison. So a strong dollar is going to mean a weaker gold and silver prices, but I think this is just temporary. I think we're going to see, likely, especially knowing what's coming with the next Fed chair, there's going to be more rate cuts down the horizon, which is going to be good for gold and silver. So I think this is just something that will not last in the overall, but it just goes to show you how the psychology of the markets work. And so the current buying cycle that began in 2024, we're going to see more central banks continue to buy in 2026, I feel, for gold. And that is going to actually help silver. It's going to prevent it from falling too much out of whack, even if we saw the ratio climb back up to 80, 90 to 1 at the most. Right now, silver is sitting with gold, the ratio at 72.16. But anyway, so we're also seeing the dollar index firmer. Crude oil prices are weaker and trading around $59.25 a barrel. You can almost buy a barrel of oil for an ounce of silver, as somebody had pointed out in the comments section on one of my videos recently. And the yield on the benchmark 10-year U.S. Treasury note is presently around 4.15%, according to Jim Wyckoff. He also has some technical information about the gold and silver markets. And, technical figures and analysis is essentially pattern analysis of what's happened and to predictive is what could be happening in the future. And the futures bulls' next upside price objective is to produce a close above solid resistance at the contract record high of $4,433 an ounce for gold. The near-term downside price objective for the bears is pushing futures prices below the solid technical support at $4,100 an ounce. First resistance is seen at today's high of $4,247 and then at $4,285. The first support is seen at $4,200 and then at $4,150. Meanwhile, the March silver futures bulls have the strong overall near-term technical advantage. A bull flag pattern has been forming on the daily bar chart. Bull's next upside price objective is closing prices above the solid technical resistance at, 60 bucks. We've not been able to get there. We've gotten within, I think, 40 cents shy of it, but never could quite get to 60. But I tell you what, I don't think we should roll it out anytime soon, especially after this FOMC conference and press release that will come after this meeting. Because more likely they're going to cut rates by a quarter point. So the next downside price objective for the bears is closing prices below solid support at 55 bucks. First resistance is seen at the contract high of 59.90 and then at 60. Next support is seen at the overnight low of 57.77 and then at last week's low of 56.85. So that is what is looking. Of course, we're looking at futures price, and I think silver futures did get up to $60 and beyond. But, when you look at the futures price and the spot price, we are still in contango, and that means that likely with silver especially, and they're going to see some sort of normalization of the markets, any kind of activity and moves to the upside, I think will mostly be based off of the situation that is not a crucial emergency, except for maybe we might see a situation occur like we have in the past with Shanghai. The Shanghai markets very well could be playing a role into where the price goes from here. But fascinating indeed. But the market's indeed holding on fairly strong. So the dips just very small and I think very temporary. So there's your market report for today. Let me know what your thoughts are in the comment section down below. I strive to bring you the latest news and analysis in the world of precious metals. I'm not a professional, never pretended to be, but I hope you enjoy the content regardless. With that being said, if you're new here, I hope you will consider subscribing to the channel. And I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch and to encourage you to please rate, share, comment, and subscribe.